All right, y'all. So this is just a video answering a question from one of my students in the my channel. She basically said, "I hope this makes sense, but for swing trading, the monthly like MWD means monthly, weekly, daily, 4 hour. How do you go about using the strat combinations and top down analysis?" Right. So I told her I'll make a video on that, so I'm making a video now. So with the strat sheet, as you can see, there's multiple different combinations that you'll see in the market, but the goal of using actionable signals is to stack them to look for an actionable signals on higher time frames, and then go down to the lower time frames and look for actionable signals on those lower time frames to trigger the higher time frames, right? So we want to lose the little ones to knock over the bigger ones and create a domino effect. So I'll pull that up with ES, but actually I'll pull up a stock actually because it'll be a little bit better. Let me see if I can pull up just a random stock. I'll say Amazon for something like that. Let's use Amazon. So if I pull up Amazon, this is going to be the hourly chart, daily chart, weekly chart, and then the monthly chart, right? So I'm going to exit this real quick just so y'all can see it. We're going to look, first I want to go on to, let's just say, for example, like a monthly time frame or something like that, right? And I want to look for some type of, or monthly or weekly, just to look for something. Let's just use, I guess, this 3-2 or something like that. I don't know if this would be the best example. Let's see. This would be, all right. When did this take place? Right here. Boom. So we have a 2-2 reversal right here on the weekly time frame. So I'm going to mark this out. This is a 2-2 bullish reversal on the weekly time frame. So I'm going to put trigger for the week. So above this purple line, that is a 2-2 reversal to the upside. And the target for a weekly, for that on the weekly, will be right here at that high. And I'll look at this. I'm not making this up. Like, this is a 2-2 reversal. We have a 2 down, right? This candle takes out the previous low only. This candle takes out the previous high only. 2 down takes out only the low. 2 up takes out only the high of this previous candle. This is going to be the target. I'll pull up the thing. And I zoom in on this one right here. What do we have? So if I go back real quick, just so you can see it. Boom. First, we had a 2-2 bearish reversal, right? So during this week, price had triggered. So I'm going to show you this real quick. And this is so beautiful. This is why I love actionable signals, right? So this triggered to the downside, right? This is a 2-2 bearish reversal right here, right? So if you see right here, we had a 2 up. We had a 2 up. Price only took out the previous high, followed by a 2 down. So a 2 up, 2 down, 2 up, 2 down reversal. So once price took out that previous low, the weekly, as long as price is below 199.61, is in force to the downside, meaning it's in force, meaning it's going in the direction of going to the downside, and then it's going towards this target, right? Once the weekly time frame is up, meaning these 5 days, Monday, Tuesday, Wednesday, Thursday, Friday, once that's over and this weekly candle closes and the new weekly candle opens up Monday, November 25th, there's a new weekly candle that opens up. So watch this. When a new candle opens up, that's called the flip, right? So with time frame continuity, I talked about it in the previous video. The flip is when a new candle opens up. So literally, I'm gonna just play this out real quick. I'm gonna go back just to show you what, like, literally what the flip is. It's really simple, right? Next candle opens up. So if I go next one right here, see if it'll let me do it. Is it gonna let me do it? What the heck? My bad, it's kind of tripping right now. I don't know why it's not letting me do it. Oh, it's probably doing it on the other time frame. Hold on, let me see something real quick. Yeah, it's doing it on this time frame. So yeah, I apologize. Yeah, so it's doing it on this time frame. So right now, as you can see, these new candles are flipping. This is a flip. This flipped at 1 p.m. The next candle is going to flip at 2 p.m. And the next candle is going to flip at 3 p.m. and so forth, right? So these candles, based on the 1 hour time frame, they flip every hour because it's a 1 hour time frame. So on the week, the weekly candle flips every week, right? So if that makes sense. So that's what the weekly candle is based on. So if I go to, I'm just sticking to the lower time frame real quick. I'm going to go Amazon, but I'm going to change this to the weekly time frame just so I can show you what that looks like real quick. Just so I can skip forward. Boom. As you can see, this is going by the day. Next candle opens up. This is Monday. Watch this. Tuesday, Wednesday, Thursday, Friday. Boom. Watch this. Now the next candle flips. So that's Monday, Tuesday, Wednesday. As you can see, so Monday, Tuesday, Wednesday, price pushed price up, and it became a 2 up on the weekly time frame. But the daily time frame, if I'm showing you what the daily looks like, we were here, then we went. So let me show you this real quick, just so you can see it. First we were here. Then we set up for a 2-2 reversal on, watch this, on the daily time frame. Trigger on the daily time frame, targeting right here. So if I go to a higher time frame, to trigger the 2 up on the weekly time frame. So if I go back, watch this. This is the market, the blue level. That marks out the 2-2 reversal right here, because we had a 2 up right here because it took out the previous high, didn't take out the previous low. Next candle opens up, only takes out the previous low, doesn't take out the previous high. This is a 2 down. If the next candle opens up and takes out this previous high, that is a 2-2 bullish reversal. Why? Because this candle took out the previous low. This candle, if it takes out the previous high, 2 down, 2 up, reversal. 2 down, 2 up, reversal to the upside. Watch this. Next candle opens up, takes out the previous high. Watch this. It goes 2-2 reversal to the upside. Does it reach the target on this candle? No. So now when the next day opens up, guess what Wednesday has to do? Wednesday has to open up and take out this previous high right here from this candle, from Tuesday's price action, to reconfirm what we did on Tuesday. So Tuesday we went up. So to reconfirm what we did on Tuesday, what do? You got to go up, right? If you, watch this, if you negate what happened on Tuesday, that means that you're going down. That means you're going against what they were doing on Tuesday. So what did they do on Tuesday? They were buying. So if Wednesday they start selling, they're negating what happened on Tuesday, right? Does that make sense? So right here on the daily time frame, this 2-2 reversal on the daily triggered, watch this, the two up, right? The 2-2 continuation, right? Because this is a 2 up, right here. This took out the previous high, didn't take out the previous low. This is a 2 up continuation on the weekly time frame. So the 2-2 reversal on the daily time frame triggered the 2-2 reversal, the 2-2 continuation, my bad, on the weekly time frame. So that's how you use lower, like the other time frames, to trigger higher time frames. You identify what's happening on the higher ones, and then you drop down to a lower one to see how you can get actionable signals on those lower time frames to trigger everything else. And again, this works like, so if I'm on the monthly time frame, for example, right? If I go to right here, this is a 3-2-2 reversal right here. But if I go back to this date, right, on the daily time frame, price was down here. So price had to do some type of actionable signal or something to trigger this monthly time frame to go to the upside. And then the weekly had to do a trigger to take this thing to the upside, right? Every single move that happens in the market, right, there's some type of actionable signal taking place, right? It's either an actionable signal or it's either a 1, 2, or a 3, period, right? If you see on this chart, there's only 3s, 2s, and 1s. This 3 right here takes out the previous high and the previous low. This candle right here takes out only the previous low. Then it goes bullish. Next candle opens up, takes out the previous high. Everybody that was selling this month and tried to sell at the beginning of this month, and then they got caught up under the water at the back half of the month, right? They're now underwater and they now have to cover their positions. So if you're selling, let's say you start selling right here, right? If price starts going against you like this, what do? You got to exit. You have to buy now. Like, for example, if I buy shoes for $200 and then the value starts going to $150, $120, $100, it's going against me. Guess what I got to do? I got to sell it for a lower price now if I want to get my money back. So now I got to sell it for $90. So I bought expecting it to go higher. Then it started to go lower. Now I have to exit my position, right? So that's the goal of using actionable signals plus multiple time frames to obviously help us get winning positions, right? So I hope that helped in terms of using multiple time frames and what that looks like. So if I pull up multiple charts real quick, just so you can see it, I'll pull this back up to the hourly time frame, right? This is going to be the daily, this is the weekly, and then this is the monthly. I'll actually use 3 just to make it a little bit easier, right? So I'll just use the daily, use the weekly, and then the monthly. So now you see my crosshair kind of on all 3 of them, right? We're going to go back in time, select bar, and I'm just going to go back just so you can see how everything looks. I'm going to go back, boom. So this is a 3 up, 3 2 on the daily time frame. This is a 2 up on the weekly time frame. Monthly is up and bearish, right? Let's see if it's going to play out. Boom. Next candle opens up, goes bearish. Oh, it's playing, my bad. So right here, boom. You see right here, this is a 2-2 bullish reversal to the upside. That's the trigger on the daily time frame. As you can see, this is the trigger on the daily time frame. This is the target for the daily time frame. Now, the next day that opens up on Wednesday, it has to reconfirm what happens here in order for us to stay in our position. As you can see, this is a 2-2 reversal on the daily, but it's an inside candle on the weekly time frame, and it's about to, but it did not yet break the high of the previous week. And the 2-2 reversal, this actionable signal on the daily time frame is triggering this 2-2 continuation on the weekly time frame, which will then, if I put this to the monthly time frame, I don't know why I didn't have it on the monthly. Right now, it's already 2 up right now on the monthly time frame, so it's just going to make it keep going farther to the upside, right? And then obviously the next target we have for the monthly to take out one of the previous months from July, right? Price has to break up above 201.20, right? So let's see what we do. If you go to the next candle real quick, next candle goes 2 up on the daily time frame. So what did this do? This 2-2 continuation, right? The 2-2 reversal right here, that's where we're getting our actionable signal from. Then we have the 2-2 continuation where it reconfirms this actionable signal, this bullish actionable signal to the upside. That 2-2 reversal triggered the 2-2 continuation, which triggered the 2-2 continuation right here. 2 up right here, takes out the previous high, doesn't take out the previous low. 2 up, 2-2 continuation to the upside on the monthly, right? That's how you use lower time frames to trigger the higher time frames. Now you have, watch this, you have people on the daily buying, you have people on the weekly buying, you have people on the monthly buying. Everybody's buying right now. So because everybody's buying, pushing price to the upside, you now have what's called full time frame continuity to the upside. The daily, weekly, monthly, and also looking at the 60-minute time frame, are they going to the upside? That's full time frame continuity. As you can see right here, boom, we go inside. Pay attention to what that does on the weekly time frame and the monthly, just so you can see what price action looks like. This is a 2-1-2 bearish reversal, and now this is also a new week. So the daily and the monthly, weekly look the same. So if I pull it up real quick, they're the exact same. They change. Watch this. When the new day opens up, boom. Now we're inside. We're setting up for what? If you look at the actionable signal sheet, we're setting up for either a 2-1-2 continuation to the downside, right, where we have an inside bar. If we're going 2 up, inside candle 2 up, right? No, actually, that's a 2 down right there. Yeah, that's a 2 down. So I'll look at that real quick. I'll just to make sure you guys are good. This is a 2 down, inside candle, right? So the only thing that we can happen from here is a 2 down, a 2 up, which would be a 2-1-2 reversal if it goes 2 up, right? Or 2 down, inside candle 2 down, which would be an inside bar continuation, or we stay inside, right? Or we go 3, like become a 3. So we take out one side and then take out the other side, right? So either way, the only thing that can happen is an inside bar, an outside bar, which is a 3, which looks like this, or a 2, meaning price has to take out one side and it stays just taking out that one side. So let's see what it does. Since we know those are the only things that can happen, let's see what it does. Boom, 2 down, inside candle. Once it breaks that high, if it stays above that level and we keep pushing to the upside, guess what? We're going to the upside. So the first target we got is right here. To take that out, we take that out immediately. Then the next target will be right there. The next target will be right there. Boom. We easily smack that out the park. And now guess what? Now on the new week, we're 2 up, 2-2 continuation. We're 2 up on the week. This 2-1-2 reversal triggered the 2 up week, which is now pushing this, like keeping the monthly time frame in force, going to the upside as well. Watch this. The daily started to have conflict, right? The weekly and monthly were bullish. Watch this. Let me show y'all this real quick. I'll go back this far. Go on the daily. We're inside. Boom. Right here, new month. The new week, my bad. New week started November 11th, Monday. It's inside week, and we're 2-1-2 reversal to the downside. So right here, watch this. The daily and the weekly were bearish. The weekly was inside. The daily was trying to go to the downside, and the monthly was still bullish, right? So watch this. When you have conflict, right, you have to see. The only way this can, watch this. If we go 2 down and we keep going on the daily time frame, then the daily and weekly still remain bearish, and that could potentially change continuity and keep price keep going down. But watch this. The new day is going to open up. So let's see what it does. The new day opens up and it goes inside and it goes back bullish. So now the daily, weekly, and monthly are back bullish again. That means that sellers tried, watch this, sellers tried to take price to the downside on the daily time frame, right? They tried to, and then buyers stepped up the next day, negating everything that they tried to do this day, setting up for when the new day opened up on Wednesday, boom. Everybody that was selling these days right here, where they were selling at this high and then selling Friday and then selling Monday, boom, they're dead in the water right now. That's how you see this candle so big, because everybody here had to sell. So everybody that was selling here, betting on this thing going to the downside, now has to buy. Because watch this, if I'm buying and I sell at a higher price, that's how I make money. But if I buy at a higher price and sell at a lower price, I lose money. If I sell something at a high price and buy it back at a low price, I make money. So whoever was selling here, they were making money when it was going down. But as soon as it shot up to the upside like that, guess what? They're now losing money. So they have to now do what? To exit a sell position, you have to buy. To exit a buy position, meaning if I bought a MacBook for $1,000, to exit or to sell it, I have to sell. I just said it. I have to sell it, right? So everybody that was selling right here, they're dead in the water, and they have to now buy to cover their position, which puts price back into full time frame continuity. The daily, weekly, monthly are all bullish right now. The daily tried to take them down. They failed to do so, right? So I hope this answers your question in terms of time frame continuity. And using multiple actionable signals, multiple time frames, right? Or using actionable signals on lower time frames to trigger actionable signals on the higher time frame. So I hope that helped you. Let's get it.